Welcome back to Financial Freedom FX, where trading knowledge meets clarity. In today's video, we're unlocking the secrets of oscillator indicators, tools that professional traders rely on to anticipate market turning points before they happen. Oscillators don't just show us where price is, they reveal when price is overbought, oversold, or losing momentum, critical for spotting entries, exits, and trend shifts. Whether you're a scalper looking for quick reversals or a swing trader wanting confirmation, oscillators add a powerful layer of confidence to your trades. So let's dive into each major oscillator strategy using real chart examples and decode how they work in live market conditions. In this chart setup, we see a strong confluence of Bollinger Bands with the Awesome Oscillator, which is a momentum-based histogram. Here's how it works. A bullish candle closes above the middle Bollinger Band, which acts as a dynamic moving average. This signals that price is gaining bullish pressure. Meanwhile, below the chart, the Awesome Oscillator turns green and crosses above the zero line, confirming that momentum is now favoring the upside. This dual confirmation, candle above the middle band plus AO flipping to green, makes for a high probability long trade. It's a great example of how oscillators validate price action setups, filtering out noise and confirming strength behind a move. The Stochastic Oscillator is one of the most widely used tools to identify market extremes. It consists of two lines, %K and %D, which oscillate between 0 and 100. When both lines drop below the 20 level, it indicates oversold conditions, and a buy signal is generated when %K crosses above %D. Conversely, when both lines rise above the 80 mark, we're in overbought territory and a sell signal is triggered when %K crosses below %D. This chart highlights how these crossovers align with reversal zones. What makes Stochastic powerful is its ability to react quickly to price movements, making it ideal for short-term strategies and volatile market environments. Bill Williams's Alligator and Gator oscillator work together to visualize market phases: sleep, awakening, eating, and exhaustion. The Alligator consists of three smoothed moving averages, jaws, teeth, and lips, which signal direction and trend development. The Gator oscillator below uses colored histogram bars to show the strength of the trend. Green bars on both sides indicate a strong directional move. Red bars show weakening momentum or transition phases. In this example, when the Gator shows green bars widening, it means the Alligator is eating, a metaphor for trending conditions. When the bars contract, the trend is weakening. This system is great for identifying early-stage breakouts and avoiding sideways chop. One of the most powerful uses of oscillators is spotting divergence, when price action and momentum go in opposite directions. In this chart, we have a classic bearish divergence. Price makes a higher high, but the Awesome Oscillator forms a lower high. This tells us that although price is rising, the underlying momentum is fading, a warning that the trend could soon reverse. Once the AO crosses below the zero line, it acts as confirmation for the short entry. Divergent setups like this are often early indicators, helping traders exit before a reversal or catch the very start of a new trend. It's especially effective when combined with trendline breaks or candlestick reversal patterns. The Price Oscillator here is a clean tool to visualize overbought and oversold areas. The yellow line moves above and below a zero midpoint. When the oscillator dips into the oversold zone, typically marked in yellow below zero, it signals a buying opportunity is developing. When it rises into the pink overbought zone, traders prepare for potential reversals or look for short setups. This type of oscillator is particularly useful in range-bound markets, where price oscillates between support and resistance, and trend indicators give conflicting signals. The key is waiting for the oscillator to turn before pulling the trigger, avoiding premature entries. This chart cleverly integrates volume analysis with oscillator logic. At first, we notice strong bearish candles accompanied by increasing volume, a sign that the sellers are in control. But as the trend continues, volume starts to decline and the oscillator flattens, showing a loss in bearish momentum. The price action also begins to contract, forming smaller candles. This combination, decreasing volume, weakening oscillator, and consolidating price, indicates that the bearish trend is running out of steam. Many smart traders use this signal to tighten stop losses or prepare for a potential reversal, especially near a support zone. Here we use Parabolic SAR, the dots above or below price, combined with the Stochastic Oscillator. When the SAR flips below price, it suggests a buy, but smart traders wait for confirmation, the stochastic crossing above 20 from the oversold zone. This confluence confirms the momentum is shifting upward. The same goes for short trades. SAR flips above price and stochastic crosses downward from overbought. This dual strategy filters out false SAR signals in ranging markets and works best in trending environments when volatility is stable. In fast-paced markets like scalping or short intraday sessions, traders rely on quick signals like this fast stochastic crossover strategy. The oscillator moves swiftly between overbought and oversold zones, and each crossover within the signal box is treated as a potential entry. To avoid whipsaws, many traders use strict stop-loss or pair this with price action, like engulfing candles or break of structure. This strategy isn't for the faint-hearted, but for experienced traders, it offers precise, repeatable signals with tight risk control. This MACD-style histogram oscillator helps track trend momentum through its relationship with the zero line. When the bars cross above the zero line, it indicates bullish momentum is building. When they cross below, bearish strength is increasing. Some traders also use the twin peak setup, when two histogram bars form peaks below zero, followed by a green bar as an early long signal. The beauty of this strategy lies in its simplicity. You don't need to track moving averages visually, as the oscillator handles all the smoothing and divergence calculations under the hood. This oscillator is derived from the difference between two moving averages, in this case, the 9-day and 18-day SMAs. When the faster 9-day crosses above the slower 18-day, the oscillator turns positive, signaling bullish momentum. When it crosses below, the oscillator dips below the zero line, suggesting bearish pressure. This method smooths out market noise and gives swing traders a reliable way to stay in trends longer. The oscillator also helps avoid false breakouts by confirming the direction with momentum. As you've seen in this video, oscillator indicators are far more than just wavy lines or colored bars. They are powerful market tools that measure the heartbeat of price action. Whether you're using the stochastic for timing reversals, the Awesome Oscillator for spotting divergence, or the MACD histogram for momentum shifts, each of these tools gives you a unique edge. But remember, no indicator works in isolation. The real magic happens when you combine oscillator signals with solid price action analysis, support resistance levels, or candlestick patterns. So, here's your next step. Pick one of the oscillator strategies we discussed today and test it out on a demo chart. Notice how the signals form in real time, how they behave during trending and ranging markets, and how you can add your own risk management filters. If you learned something valuable today, give this video a thumbs up, subscribe to Financial Freedom FX, and turn on the bell icon so you never miss a powerful trading breakdown like this. Drop a comment below, tell us which oscillator you use the most, or request a strategy you'd like us to cover next. This is your host at Financial Freedom FX, empowering your trades, guiding your journey, and helping you move one step closer to true financial independence. See you in the next video.